Recently, in order to ensure the stable landing of the yen exchange rate, Japan is selling a large number of US bonds held in its hands to finance intervention in the foreign exchange market and relieve the huge pressure caused by the rapid depreciation of the yen. According to the data released by the US Treasury Department, Japan has sold about $260 billion in the past 2 months, a decrease of 22%. In addition to the massive reduction of US debt holdings at the official level, Japanese private capital has also been selling off to reduce losses. As the largest holder of US debt, Japan's massive reduction will inevitably lead to the liquidity of the fragile US debt market. For a long time, the U.S. government has been accustomed to using the liquidity premium level of new and old government bonds as the win-win to measure the liquidity tightness of U.S. bonds in the market. However, the premium of the newly issued 10-year US debt has reached the highest level in nearly 7 years, which shows that the liquidity of the US debt market is deteriorating. According to the Federal Reserve, the current liquidity of US Treasuries is at a historical low, which is very dangerous. There are 3 main reasons why Japan chose to sell off US debt on a large scale. First, in order to alleviate inflation, the Federal Reserve's practice of increasing interest rates has led to a sharp drop in the price of US debt. In order to avoid risks, a large number of investment institutions have reduced their holdings. Second, the Federal Reserve has introduced a policy of shrinking the balance sheet to seize the opportunity to harvest the world. The act of consolidating the US financial hegemony has met with the dissatisfaction of most buyers, causing heavy losses to emerging market countries such as Brazil and Argentina. As a result, many investors' confidence in US debt has declined due to the US watch shrinking order, and they are unwilling to be put by the US wantonly. Third, in order to maintain the stability of the foreign exchange market and prevent the sharp devaluation of their own currencies, the central banks of many countries have also chosen to reduce their holdings of US debt to increase their foreign exchange reserves in case of emergency. In the past 3 months, Japan has cashed out more than $60 billion of national bonds to stabilize the yen exchange rate. What worries the US government is that Japan's massive sell-off of US debts for self-insurance is likely to form a domino effect, which will lead many countries to follow suit. At that time, US debt will usher in a larger wave of sell-off, which will lead to the stagnation of the US economy and a severe earthquake in the entire US financial market. In addition to Japan, Luxembourg, Belgium, Switzerland, and other countries have joined the selling team, which has started a prairie fire. In fact, the US Treasury Department is dissatisfied with Japan's selling behavior and has repeatedly expressed its disapproval. However, compared with Japan's massive selling of US dollar bonds, China has recently gone against the trend, increasing its holdings of US bonds and returning to around 10,000 trillion. Many netizens expect us to dump US debt as well, so as to hit the US economy. In fact, China's holdings of US dollar government bonds account for a small proportion of the total amount of US government bonds, and the sell-off has little impact on the US economy. In addition, in the game between countries, in addition to attacking opponents, we should also consider making profits. At present, the exchange rate between the US and China has fallen below 7. China has seized the right opportunity to increase its holdings of US bonds. On the one hand, the inflation in the United States had quietly peaked in July, while the recent exchange profits of US bonds have risen due to the continuous rise of the dollar index, and the yield risk of holding US bonds is far lower than that of US stocks. On the other hand, as the trend of American economy retrogression is gradually obvious, the demand for safe haven of American bonds has increased, which has promoted the price of American bonds to rise. Therefore, at this time, China's practice of buying a moderate amount of 2-year short-term as debt can help us obtain considerable profit returns in the short term, and also help us maintain the scale of foreign exchange reserves. To sum up, the different attitudes of China and Japan towards us that are mainly based on their respective national conditions.